Good morning, everybody. Hey, welcome to Thursday, December 19th. I hope your day is off to a great start as we kind of wind down this week. Today and tomorrow ends this week, and then we go into kind of holiday mode the next 2 weeks. And so yesterday, market's down just a slight little bit, and we'll talk about that, the impeachment, a lot of other stuff to talk about today, a few earnings reports as we kind of close out that time of the year and that time of the quarter. Remember, folks, we've seen a lot of volatility out there. And if you are 5 years out from retirement or already retired, the amount of risk you have within your portfolio is vitally important. It's important that you understand what risk you have and how it lines up with your risk number. Schedule your free, no obligation financial x-ray review. Give us a call at 863-382-0037. And let's walk through that process and determine how much risk you really have and what the fees are you're paying inside your portfolio. Hey, I look forward to talking to you a little bit more here in a minute when Dave comes online.
Let's check in on Wall Street and see what's going on this morning. We had an impeachment vote yesterday. That was kind of expected to be kind of a downer, but I didn't see any changes in the market. They seem to have baked it in or shrugged it off one way or the other. Whole bunch of other stuff going on this morning, though. Let's head downtown to the offices of Statler Financial Services in downtown Sebring, where Phillip Statler is standing by. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. It's a little chilly this morning. I don't know about you when you woke up this morning, but I had to put a little coat on.
Hey, by the time I wake up, it's even colder than when you wake up. Believe me, it was nippy. I've got a lined jacket on for only the second time this year today.
It's kind of refreshing, though.
Well, that's true. I mean, I moved down south back in '78 for the first time, and I got spoiled in a hurry. I'm pretty much naturalized Floridian now. If it gets below 65, I got a jacket on, and my northern friends laugh at me for it. But by God, my blood's gone thin, and it's cold outside. Hey, we started out with kind of one of those mixed days yesterday. We had to close 27 points down on the Dow. Is nothing to panic over. NASDAQ managed a 4-point gain. Standard & Poor's down by $1.38. Another day like it's been so far this week. They trade up during the day and then take money off the table at the end of the day. It really didn't look like there was anything as earth-shaking the way the national news people were talking about as the impeachment was. I don't think Wall Street gave a rip, do you?
Not from what I see today. I mean, they're acting more on the economic news this morning than they are anything having to do with the Trump impeachment deal. And as a matter of fact, I think it's interesting that since Nancy Pelosi announced the formal impeachment inquiry, the S&P 500 is up nearly 7%.
I don't know whether it was coincidence or a reaction, but your point's taken. Yeah, the Wall Street really hasn't cared about just how much the national news sources have been saying this is the event of the century, because basically Wall Street's been shrugging its shoulder. Start the morning off with what would in a vacuum be good news. The number of jobless claims last week declined by 18,000 down to 234,000. Still abnormally low unemployment for the economy, but Wall Street actually expected better, you say, huh?
They did. They expected somewhere 225, 226, depending upon whose numbers you look at. Either way, it's below what it came in at. So that was kind of a miss, and I think that's when we saw the futures start to fall a little bit more.
Okay. The standards become pretty high. I mean, we start talking about unemployment rates in the 3.5% range, and then we talk about jobless claims at under 250,000 a week consistently for over a year now. And you kind of sit back and say, what the Sam Hill do these guys want? I mean, it's abnormally good, and it's been that way for quite a while now.
Yeah, you're right. It has, and it seems to be staying that way too. So, full employment. What do you? If they go up a little bit and they go down a little bit, I mean, we're still in a good employment situation. However, I did see on the news this morning that 50% of the folks out there didn't get a raise this year.
And that's kind of reflected in the really modest, national wage gauge figures we're getting. I mean, we're making a little bit more, but on balance, we're not making a lot more. And so there's a lot of zeros that get balanced in there in order to bring the average down, right?
Well, that's true, but you would think in a full employment situation like we've been in now for a while that you would think that inflation would be more substantial in order to keep the employees you have.
Well, the conventional wisdom would say that. Yeah, I remember back the last time we had a boom with inordinately low unemployment. The running joke was the burger flippers at McDonald's were getting offered 401ks in order to get them to come to work. That was a joke, but at the same time, there was a big upward tick in wages when the employment supply got short. And while yes, we're getting gains, it looks more like just the natural ebb and flow than it does something that has demand outstripping supply.
You're right. That's exactly the way I see it too. It's just you would expect more, but it's not there.
Absolutely. The other economic news that came out this morning is one of those green eye shade things that getting into the calculation of it is over my pay grade. But the Federal Reserve banks put out regional business indexes. And as I said, it's green eye shade stuff as to what goes into the index, but the move makes sense. Philadelphia Federal Reserve put out their business index for December, and they reported it as zero.3. Now, what that means, probably neither of us know for sure. But the real big change that becomes noteworthy is it's down from November's number of 10.4. That's a precipitous drop, and it can't be considered good economic news for at least the northeastern part of the country.
Definitely. I mean, that's a substantial drop. And you're right. I haven't seen that number or what that expected number was supposed to be, but that to me would show that we're definitely that's not a good thing.
Now, the northeastern part of the country has its economic challenges, and it's been kind of a rough start to the winter up there. But that kind of a drop, at the very least, can't give traders a really great feeling when they start the morning out. Unless, of course, they're trading a few of the issues that are really making money like crazy, like Conagra at the moment, right?
Well, that's true. We've got some few stragglers coming in. We got Conagra. They beat by 6 cents a share. Revenue topped estimates, so good things there. Their food brands like Bird's Eye and Healthy Choice and Vlasic pickles and that kind of stuff did well. They had an acquisition in 2018 come online, and so that's helping them out too. And they're up almost 5% this morning.
Okay, I'm showing them up even more than that on my big winner list. Yeah, the headline that I saw was Conagra is doing a lot better than Kraft, comparing it to the other big food giant that's out there.
Well, yeah. I mean, let's face it, Kraft's been struggling for a while.
Absolutely. It made an interesting comparison, though, that you can have a big conglomerate of food. You got some tech issues as well that were doing well.
We do have Micron Technology. They came in a penny above estimates, and their revenue was well above Wall Street estimates too. And they're the chip maker, so they're doing well. They're up about getting close to 4%. But the big name that you're going to recognize.
I know we like talking about them. Go ahead.
Darden Foods, the home of Olive Garden and all that slew of restaurants. They came out and beat by 5 cents a share. Revenue, though, was slightly below what they had forecasted. Sales at restaurants that have been open at least a year rose by 2%, which was basically in line with expectations. And so they're down a little bit this morning, down 4%. I guess it's not they didn't like the revenue number, they didn't like the same store sales number, and so they're trading down. So the other one that I have is really kind of it's a household name. We don't have him around here, but Rite Aid.
Mm-hmm.
Rite Aid is the big winner today. They were supposed to only make 9 cents a share, and they came with a profit of 54 cents a share.
Holy crud.
Exactly. Revenue also beat the forecast. Now, Rite Aid has been struggling for the last year or so, and they've been trying to work on getting a little better control of their expenses. And so between that and increased prescription business, they've had a pretty good little quarter here. They're up 27.5% this morning.
Wowzers! Yeah, they are kind of the number three we all forget about in the war between Walgreens and CVS, the two big on every street corner national chains.
Yeah, and that gain overnight is on top of the 8.5% gain they had yesterday.
Now, there's an investment tip. Of course, the amateurs buy at the peak and then fall, right?
Exactly. Hey, you had to buy it, Friday to have come out okay on that deal.
Find somebody that bought it on Friday and ask for a loan. That's the trick. I am betting, based upon the movements I'm seeing this morning, that we're going to just kind of sit in our hands a little bit today, waiting for that GDP report that I think is due out tomorrow. Would that be a fair guess?
It is. We're kind of a mixed boat today, Dave. It's fluctuates between green and red, at least on the Dow. The Dow's 1 minute I look at it, it's red. 1 minute I look at it, it's green. Right now it's green up $3.50. Nothing really. We've got the the S&P 500 down almost $3. We've got the NASDAQ down a little over $6. So kind of a mixed bag right now on the equity indexes. On the commodities front, we've got the gold and silver both. Whoops, I'm sorry. Gold just changed. It was down. And blinked my eye, and it's up now. $2.15 an ounce. Silver is down about 3 cents an ounce right now. And then crude oil is basically flat at $60.84 a barrel.
Yeah, but the bad news is I think that's up from yesterday morning, comparing apples to apples for time of day. It's off from last night, but still over $60, right?
Yep, over 60.
Overseas markets, by and large, another mixed bag there, too. Asia was off by a little bit for the most part, although Japan picked a gain up before they closed early this morning. European markets mixed this morning as well as they try to sort out the situation with Brexit. Phillip, trying to figure out how I can make 2020 a productive year for my retirement fund. I need some advice. How do I find you to get that advice?
David, give us a call at 382-0037. Follow us on Facebook at Statler Financial Services. Catch our website, statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m. While you're out doing your Christmas shopping this weekend, a great time to tune in.
Absolutely. And back here again tomorrow morning about the same time on Light. Phillip, thank you a million. I appreciate it. I'll see you tomorrow, all right?
All right, man. You take care.
Thank you. Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Remember, I know we're busy with all the stuff happening in holiday time, the hustle and bustle, and that's great that we're getting ready for Christmas and that time we can spend with our family and friends. But don't let your finances get out of control. Remember that. Keep that in the back of your mind as you head in the holiday season. Sometime after the first of the year, let's you and I get together and make sure that you're prepared for what could happen in 2020. Call us right now at 863-382-0037 to schedule your no obligation financial x-ray review. Have a great day. I'll talk to you again tomorrow.